Hello traders, you're welcome to my channel. Uh, Today I'm going to dive very deep in the area of how to simplify your entry. And as a trader, we know that when your entry or your strategy is complicated, that means you are simply doing the wrong thing. Today is 16th of March, year 2025, as at the time I'm recording this video. Now, the best top-down analysis you can ever think of as a trader is, number one, you must be able to choose three time frames. Choose three time frames where the first one is your higher time frame, followed by another one, then the third one is where you take your trade or your entry. I give you an instance. Anytime I'm doing my top-down analysis, even though I'm going to look at the monthly and the weekly, but the three time frames that I should always be concerned about is the daily, the 4H, and the 1 hour. The 1 hour is where I execute my trade. Now, the daily, if you look at this, uh, if you look at this chart now, you discover that since on Monday, the 13th of January this year, 2025, we have been what? We have been bullish. We have been bullish up to March 12th, that is on Wednesday. Now, that tells us that we've been bullish. Now that you have already established the direction of the trend, what do you need to do next? You have identified the direction of the trend. Direction of trend is what? Bullish. Right? That is established. Now, what do you need to do next? What I need to do next as a trader is for me to go to 4 hours. Let me see whether what is going on the daily time frame is exactly what is going on the 4 hours. Now, where do I need to focus on most? I need to focus on 4 hours. The 4 hours is the trend and the time frame that I need to stay put, stay glued to. Once in a while, I go to daily and let me see what is going on. But my major time frame where I will have to stay to see what is going on is the 4 hour. Now, the 4 hour is been bullish. Now, we've been having a pullback. All right? We've been having a pullback. We've been having a kind of a pullback, a bearish trend. All right? You can now see that at this point, we have a high and we have a low. All right? This is the range. Here, like this, up to this point, this is our range. Price is here right now. But do you need to look at this whole range because you want to trade? You want to take a trade as a day trader? The answer is no. What do you need to do? Guys, you follow me so that you understand that trading, as much as trading is difficult to learn and to understand, there's still the simplicity aspect. Because even the Bible says, get knowledge, get understanding. But in all that getting, get understanding. So you get knowledge, have knowledge of anything you want to do, get the understanding, but the understanding of the thing that you want to do is what gives you an edge. So the understanding part is what most traders are lacking. It's not even the knowledge aspect. You can get a whole bunch of knowledge about trading and you will still not be profitable. But how can you be profitable as a trader? It does not matter how many years of experience that you have. But what matters is the understanding, the simple understanding of trading. Now, I've told us that this is the range, all right? Because if you look at this point, you see a low and you see the high. Why is it like that? It's like that because this point here is the origin of this push. I repeat, for us to understand. This point here, where I marked here, is the origin that triggers this move to the upside. That triggers this move to the upside. That is why, as an SMC trader, once you are able to identify an origin, that origin is what becomes an order block. This is where you have to mark, set a pending order, wait for price to come and tap into this origin again, because anytime price gets to this point, anytime price pull back to this point, it might be 2 weeks, 3 weeks, 1 month, only God knows. Anytime price come like this, as it's coming back to come and tap into this origin. And anytime price get to this point, there will be a trigger for buy. Price will have to trigger buy. This other block here that caused this push will trigger buy. If you like, call it demand zone. If you like, call it a support level. If you like, call it an origin. At the end of the day, what matters is that this is another block where financial institution place their entry. That is why you see this big candle. And this big candle here that gave this push to the upside, this long candle, is what we call is what we call imbalance. All right? Is what we call imbalance. This is an imbalance. All right? It's an imbalance because one candle, once one candle finish printing, the next candle is supposed to come where the previous candle ends. It needs to open from there without giving this long gap. Anytime you see this long gap, it signifies a very strong momentum. And as a trader, you should know that there are so many buyers here. Apart from just buyers, institutions, they are here. They took their position here. So as the price push leaving this level is going to leave what we call imbalance. So this imbalance in future, price will have to come back to cover it up. Now, as an SMC trader, we know that this point is a reference point later where price action will still come back. Because price action will want to come back and cover up this place, it will come tap into this origin, interact with this origin. Then what you will see again is a reaction that will now push the price to the upside. Will the price go back to where it was coming from? Nobody knows about it. But all we are sure about is that when price gets to this point, there will be a reaction that will trigger a buy. That is why in SMC trade, as in SMC strategy, we see this place as an origin, another block where another block, this as a same balance, price will come back so and react to this point. Once price pull back to this level, then you get a buy. A buy will trigger. All right. So once a buy trigger, you start making profit. But if there is any opposite force, the push to the upside will fail and it will come take you out. In some cases, price will come, react a little, then push to the downside the more. So it depends. So what are we saying right here is that when now that we have identified the range that price is trading at right now. What we need to do is for us to also know that we cannot just wait for the range. As a trader, understand that it has given us, price action has given us a range. All right. Now, inside this range, before price will push to the upside, it will give you a pullback. Now you watch the last pullback. The last pullback that gave us a low is this point. This guy gave us a low. You can see the range now is now becoming small as a day trader. This is how you do your top-down analysis for you not to uh, just be doing anyhow. Now, this is a low, the lowest low of all this area. This area. This is the lowest low of this area. And if you look at it, there was a pullback, right? Now, price broke this point. There's a break of structure here. And again, price make a pullback to this point. Did it get to this point? No. This is still the lowest low. Now, it broke structure here. What happened? It created a high. It has created a high here. It has created a high here. All right? Now that it has created a high here, what you should be looking at right now before you take your trade is for this price action to come and interact with this same level. Once price get to this level, it is expected that price should react from this level. I want to make it clear so that you understand that trading is not that difficult. It's just we that is making it very, very difficult. We know the range at which we are trading, right? This point here, this is a low, this is a high, all right? Now, here is the origin. When you now move up to this level, you see that this point here is a range. It's also a low. Price has created a low before it broke structure to the upside. Now, price is gradually pushing, it's coming back to this level. As a trader, what do you need to do? It has given us a high here. It has given us a low here, this point. Wait for this price to come to this level. And once price gets to this level, you watch the reaction. Once there's a rejection, that means there are buyers who are ready to play. Do you need to get in immediately? No. Wait for that first candle to close. Once that first candle closes, then the second candle that will open, look, there will be a little gap to the upside. Or if the candle gives you an inside bar, if you don't know what an inside bar is, go and read about candle. That is why you need to get the knowledge about trading. If it gives you an inside bar simply means this candle is here, then the next candle, both the low and the high, will be embedded, will just be inside the previous candle. That means the previous candle will be longer while the other one will be shorter. It will cover it. Once you see something like that, all you need to do is for you to now set your order here. This is where you get even good risk reward ratio. Where will be your target? Is the high here. Or if you don't want to do like that, use your fib 2, measure it and target negative 21, negative 27. Thank you so much and God bless you.